Now, moving on to some important macro cues from the US Federal Reserve that released its Beige Book report on economic conditions. Now, according to the report, the overall economic activity remained little changed in the recent weeks. Now, meanwhile, the consumer spending saw a mild downtick, but the overall was flat. Now, on the jobs front, growth moderated, and despite moderation in wages, remained elevated. Now, consumer prices generally increased due to the elevated demand as well as higher inventory and labor costs.
And staying with some macro news, but moving from US to the UK, inflation for the month of March brought in yet another surprise, remained in the double digits as households continued to grapple soaring food and energy bills. Now, the CPI rose by 10.1% versus economists' estimates of 9.8%. However, important to note that this is a slight dip in terms of from the unexpected 10.4% surge that we saw in the month of February, which is snapping the third consecutive month of a decline since October last year, and a skyrocketing figure of 11.1% that we had seen that time.
And well, US banking giant Morgan Stanley tops analyst expectations in the first quarter despite a decline in profits. The New York-based bank delivered a 19% decline in the earnings. Revenues also slipped 2% to $14.52 billion. As revenues dipped, expenses climbed 4%, largely by the higher-than-expected compensation costs.
And tech giant IBM has surged on the back of a robust Q1 number. Even the technology and consulting arm delivered a dismal revenue figure. Now, the gross margins for the software and consulting and infrastructure division all widened year-on-year basis. The company guided for a full-year revenue growth of 3 to 5% in constant currency terms.
And multinational automaker Tesla missed the Wall Street expectations in quarter one as price cuts weighed on the margins. A sharp decline in gross margins from 29.1% to 19.3%. Now, do remember, Tesla cut prices worldwide on its EVs, including the US, where it recently cut prices for the sixth time this year amid rising competition.
And let's talk layoffs, right? Because that's the word that has been doing the rounds in the last couple of months. Now, according to Meta's latest round of job cuts announced in March, the company started laying off employees in technical roles ranging from likes of software engineering, graphics programming, and similar lines as well. Now, the same layoffs did in fact impact the company's product-facing teams as well. And going forward, the company also plans to continue these layoffs in the next month as well.